and then we'll join as we go. So, good morning, everyone, and welcome to Neutral Path and Ascend joint webinar on business models and financing instruments for PCEDs, Positive and Clean Energy District. I'm Stefania Mascolo from Eurocities, and I'm happy to be your moderator for today's session. So first of all, I want to thank all of the speakers, partners, and cities who join us today. Thank you for coming, and I really hope that this session will be insightful and useful for us all. So today is meant to be an icebreaker session, and with your help also an interactive session. Neutral Path and Ascend cities and partners during this month actually have reached 1 year of work during which our partners and cities have been already discussing and started to discuss and explore business models and financing instruments as one of the key components for the successful implementation of Positive and Clean Energy District. So today we want to initiate a dialogue among our partners and our cities to share their experiences so far, but also the challenges identified, encountered, and also to explore together possible solutions and synergies. Also, our cities and our partners have just started, but of course that there are also projects and initiatives at the European level that already have been working on this challenging topic. And so I'm very happy that today we are joined by Scalable Cities, by representatives of Scalable Cities, Making City Project, Atelier Project, and Prospect Plus. So we can not only share our approaches so far, but we can also learn from this wide pool of knowledge at the European level. The session is structured in a pretty straightforward way. So there will be two parts. During the first part, we will hear about our speakers, their insights and presentations. So during this first part, I ask to the audience to please write any questions that you might have in the chat, and we will come back to them later during the Q&A session. And in fact, during the second part, I will leave the floor to you, to the audience, for your questions, doubts, and for a general discussion on the presentations and the insights. So without further ado, I leave the floor to our first speaker, Miguel Ángel García Fuentes from Neutral Path. Miguel, the floor to you. Thank you.
Okay, thank you so much, Stefania, for the introduction and for moderating this interesting session that we have for today. I hope you can see my screen. Is it okay? Yeah, perfect. Okay, yes, so yeah, it's a big pleasure for me to start. Also, it's a bit challenging, but I would like just to frame the topic for today. Just to share a couple of reflections to you, because then we will have a lot of very interesting contributions from previous experiences, from activities that have already been carried out, and which is the most important part, that is the discussion. So from my side, just to share a couple of reflections, just to frame where we are and what are we talking about. And let me start with, just recalling at our mission, that is, basically in the projects in which we are working in Ascend and Neutral Path, to somehow, support cities and contribute to this, great objective that we have, that is achieving climate neutral cities by 2030 with the cities with which we are working, and also, by 2050 for the rest of the cities, according to this, commitment that we have at European level. And this is just, well, a new step that somehow continues over the activities that have already been carried out by several projects and also by the cities in order to decarbonize their economies, decarbonize their buildings, decarbonize their transport, decarbonize the services they offer. Well, somehow a continuation in order to ensure that we can be climate neutral by these, well, timeframes that we have established. And for this, it's quite important that we, well, capitalize on all the activities that have already been carried out. And for this, well, this webinar that we are organizing today is quite important in order to connect what has already been done in the framework of several projects that are somehow represented by Prospect Plus or by Scalable Cities that represent several initiatives and several projects that have been working on this field. And to connect this with ASCEND and with Neutral Path, where we are working on, well, demonstrating how positive and clean energy districts can contribute to this objective of climate neutrality. And for this, it is, well, there is something important to consider, and it is that cities will not be climate neutral if we are not climate neutral citizens. And what does this mean? Well, obviously, and first, it means that we have to reduce our carbon footprint as citizens, and we can go for models as, for example, those that have been well proposed by the scientific community to implement models, this 5 tons emissions model per citizen in order to achieve this objective and to transform our, well, lifestyles into a, let's say, a reduced carbon footprint lifestyle to contribute to this objective. But beyond that, it means that we as citizens, we have to find our role in the transformation of the city towards this objective of climate neutrality, understanding that this objective is not for the municipality, but it's for the city. And this means that we and all the stakeholders that belong to the city have to contribute to this, all the SMEs, all the local ecosystem of, well, companies, of associations, of representatives of any kind of stakeholder, and all the citizens as part of the city, we have to contribute to this big objective. And what does this mean? It means first that we have to generate demand for climate neutral projects in the city, and we as citizens, we have a strong power on this to somehow contribute to creating this demand for these climate neutral projects. And then second, that we have to invest on climate neutral projects. And for this, it is essential that we educate for investing, thinking of the contribution that we can make to this objective of climate neutrality, and the role that we can have as citizens into this. Educating people in order to change somehow the mindset and to think as we think, for example, in other fields of our life. For example, when we buy a mobile phone, or when we change our fridge, or when we buy a new car, we are not just thinking on how to repay the investment. We are thinking of all the benefits and that the product that we are purchasing will have in order to contribute to the needs that we have. And we have to think of the same for the services that we use in the city and for the buildings in which we live, acknowledging the contribution that we can make, the responsibility that we have as well citizens in the cities, and the role that we can play in this in order to transform the buildings in which we are, not only thinking on how to repay the investment, but thinking of all the derived benefits of transforming our buildings into low carbon buildings, or in the case of the discussion of today, into positive and clean buildings or districts. There are, well, many reports and many let's say, analysis and documents reporting about business models. And somehow the conclusion is that we do not have yet a unique model that successfully delivers all the needs that we have in order to transform our buildings and also to transform the energy system. There is not a unique model, there is not a unique solution, but there is, so for those that were expecting today somehow to find the magic model, I have bad news because, well, there is no the unique model and the unique solution, but there is hope, because even though there is not a unique business model, there are many suitable models that are based on the appropriate combination of different technologies and different solution-oriented models. And particularly in the case of positive and clean energy districts, we have a broad, let's say, a spectrum of solutions that we can implement. And this means that also in terms of business models and solutions to finance these technologies, the range of solutions that we can implement is also broad. Also, I think that it's important for today to somehow differentiate, even though I think that we all somehow have this in mind, about financing and business models, because, there are two specific concepts that have to be worked, obviously jointly, but also thought from the specificities of each of these aspects. First, financing is about securing funds. And in order to secure funds, we have to ensure that we somehow catalyze the appropriate instruments in order to ensure that investors, either public or private investors, can put their money into a project that we want to implement, in this case, to deploy a positive and clean energy district. Somehow, I think that there is an agreement on the fact that there is a lot of money there. Somehow also the technologies are there for the transition that we need, but we have to find the connection of this, the connection of these available instruments and these available technologies in order to implement the suitable projects. And for this, we still need to work on capacity building, on on improving the skills that are required, because navigating all the existing instruments is really complex sometimes. So there are many instruments in order to finance these projects, but having in mind all this map of the available instruments and the conditions that are related to these instruments is not easy sometimes. And for this, we need to continue working on implementing the appropriate skills in order to identify how this can be connected. And it is key to blend the traditional instruments with more innovative options. So to identify which are these innovative options and how they work, so that they can be connected with more traditional instruments that we know, and we know how they work. And also to couple the available public funds with the required private funds in order to co-finance all these interventions. In thinking of how and which are the conditions for these different streams of money. When thinking of public funds, for example, in the form of grants, they contribute to reducing the risk of the project, but there is no need for repaying this investment that is coming from the public funds. But when thinking of the part that is coming from private funds, it's really important to work on how to ensure that the project is bankable, thinking of the pure bankability concept from the bank perspective, so that we have to repay the investment and the finance that is coming from this private source. And to combine this when it's needed with an appropriate business model, thinking of the pure concept of business model, that it means that it will have a profitability, so that we can ensure that someone is investing and will receive a profit out of that. So for the different streams of money that are somehow invested on the intervention, we need to think of the conditions that and the way in which they contribute to either reducing risk, or to something that has to be repaid, or something that has to let's say conclude in a profit that will go to a private investor. And for this, for the business models, and thinking of this as a, let's say, facilitator in order to ensure that we can somehow also foster and leverage private funds in order to be invested into these positive and clean energy district projects. We have to think of how these positive and clean energy districts offer specific conditions that are beneficial for thinking of these business models. The first one, and is one that I mentioned before, is the possibility and the options that we have to integrate different sorts of technologies. And this means that for every technology, we can identify a specific model, or for every combination of technologies, we can implement subsets of business models that then combined will result into the let's say, the complete business model for the intervention or for the district. But we have to think also on how these projects offer some assets that can be monetized and can be considered from the perspective of the business model. And one of these is the energy flexibility. And it's really important that we implement solutions in order to monetize this energy flexibility through the specific technologies that can exploit this flexibility. And second, the surplus of energy that these districts have in terms of, as they are producing more energy than they consume, there is a surplus of energy that can be monetized and can be part of the business model. And also, as they are districts and as they have to work from a flexible perspective, there are another two benefits, and these are that we can take advantage of the economies of scale because we have aggregation of buildings, and beyond the aggregation of buildings, we have aggregation of different uses, which is really important in terms of coupling the different demand profiles and consumption profiles with the production from the renewable energy sources, but also in terms of public and private collaboration, because in order to ensure this mix of uses, for example, residential, tertiary, and so on, we will probably have a combination of stakeholders from the perspective of private owners and also public owners. And this is something that can be exploited as well. So at the end, what we need in order to identify the suitable business model or the suitable combination of different business models is to create a map of, in order to identify the multidimensional value chain, integrating all the different perspectives of the flows, and how these are connected to the stakeholders and to the benefits that they have. Flows in terms of energy, in terms of economy, in terms of data, for example, and how these flows are connected to the different stakeholders and how they contribute to the value chain in order to implement a suitable business model that most probably will be a combination of different business models. So I just wanted to share somehow these, let's say, concepts in order to frame the discussion for today, where I guess we will hear very interesting proposals from business models that have already been implemented, also financing instruments, and how this can be combined in order to, facilitate the implementation of positive and clean energy districts, and also to discuss how this can be connected with the situations of the cities in which we are working in Ascend and Neutral Path. So thank you very much, and yeah.
Thank you, Miguel, for the comprehensive introduction. So now I leave the word to Silvia Slomiak from Prospect Plus.
Thank you very much, Stefania. I'm really happy to be here. Let's see if sharing the screen works.
Perfect.
Almost perfect. Okay. So hello, everyone. Again, I work for Eurocities, and I concentrate on coordinating our involvement in a project called Prospect Plus. And I'm smiling to Miguel because he's been also involved in the project as one of our mentors. Just a quick word that what we do is promoting and teaching and facilitating the knowledge exchange on innovative financing instruments, which I will briefly tell you about in a second. And we do it through capacity building, linking mentor cities with mentees, but also various other initiatives which are open to everyone. And we have been also collecting opinions, recommendations to get to know the reality on the local ground on how realistic it actually is to move away from subsidies completely or close to completely currently at this stage. So what do we mean about innovative financing when we say innovative financing instruments? Those are not completely innovative in a sense that they have never been used before. These are models that are still not hugely popular everywhere in Europe, especially in smaller municipalities. Some of these you might know very well, some of these might be new to you, or some of these you know that don't yet make sense in your countries or in your regions because, for example, they are not reflected in the updated regulations yet, which we also see. So we are looking at citizen finance, which is both crowdfunding and cooperatives. Energy cooperatives are probably something you have heard about before. Crowdfunding is really interesting in terms of also building this community approach and showing communities, showing residents that they can participate in developing their towns or municipalities, but also benefiting from it. An example, a nice example is a PV installation that a municipality in Croatia wanted to install a PV system, and they decided to convince the residents to chip in by providing €1,000 for 10 years, and the municipality was able to offer them a more attractive return interest rate than currently banks offer, which was also quite interesting and successful, because the interest rate was 4.5%, which in today's times is quite good, and it created also this interest of residents in looking at what's happening in their town. Energy performance contracting, EPC, which is sometimes also called ESCOs because it's working with ESCO companies, is a very promising instrument, especially in some countries where the energy regulation is properly adapted. Something to flag up, if the concept is quite new to you, there are different types of EPC. There is so-called EPC Light, which is basically improving energy management in buildings without any infrastructure upgrades, which means it's quite cheap, which means it's quite quick. That also means that the savings you can get are not spectacular. Usually there would be around 20% that you can look at, but it's a fantastic way to start to gather data that you will need to then implement a full standard EPC project, which could be installation of a renewable energy system on a public building, for example, or thermal modernization of a building as well. What's important for EPC is to treat the private partner as a partner, to really share information, to share the data with them. That helps you negotiate good conditions, because the less information they have, the higher the risk for them, and that's always reflected in the rates. But also, if you are lacking some information, if you are lacking proper energy audits, or some buildings don't have very experienced energy managers, so you don't really know how the buildings are used, it's a good option to start from this EPC Light model, where you have another ESCO company who is in charge of optimizing the energy use, and that means they have to do a proper audit for you, and they have to deliver the savings and the results for you, and then you have good data to proceed to the infrastructure type, so the standard EPC. And there is also the third type, which is often called EPC Plus, and this is for deep renovation of buildings, a lot of investment, quite long projects because of very significant amount of work. There the savings are the highest. You are looking at around 70%, over 70% of savings. But those projects, because of the return rate are also quite long, and that's why in some countries they are still not very popular. Those are really long projects with the ESCOs. What's also important, and I like mentioning this on EPC, is that some municipalities, some public authorities say, let's have the shortest contract as possible, so we get rid of the private partner as quick as possible, and we benefit from the savings. This is not exactly right, because the real benefit of EPC is that the risk is on the private partner's side. As long as you have the contract, both technical and financial risks are on their side, and your public money, your public funds is safe, because you are only paying for the results you need to see. You are not paying in case they are not delivering the savings or the energy production that you need. Internal contracting is another option. Green bonds, guarantee funds, soft loans, revolving funds, so also investing and then reinvesting the savings, third-party financing, so basically mostly loans. And most of these instruments you can also combine with subsidies. So then, for example, for EPC, it would be called hybrid projects. Either you as public authority or the ESCO can take a subsidy or a grant. There is a new interpretation or kind of a publication by the European European Investment Bank and DG Regio, which really confirms that this is possible, because there was some doubt whether legally it's possible. It is possible. It's also an interesting way to start. Miguel has this interesting case, maybe you will want to discuss it later on, where if you are only beginning with EPC, you can use grants and programs such as Horizon Europe in this case, Horizon 2020 in Miguel's case, where you can test the solution without going through the whole full process, long process of also tendering for an ESCO, etc. So I would invite you to have a look at that. What we want to do under Prospect, apart from the whole matching and organizing study visits and the peer learning, is also to understand what the reality is, what are the attitudes of public authorities all around Europe, how realistic it is to quickly switch to other instruments. And that's why we are running consultations, which are still open. And I do invite you to participate, because the more responses we have, the more reliable answers, the more reliable results we will be able to share. So we are asking, for example, if your organization is already using or planning to start using innovative financing instruments. If yes, what motivated you to do so? If not, what was the reason that you were not interested? What type of support you would need, you personally as a person working for public authorities, or the organization as such? It might be regulatory changes, it might be an attitude or internal buying changes, etc. Why is it not possible in your country? It might be because of people's attitudes. They expect public authorities to find grants, so this is a kind of a political issue. It might be because the national regulation is not allowing this, or is not optimal enough to really make this attractive. So we want to understand it, and then we want to pass it on through policy dialogue to those stakeholders who should know about it and might do something about it. For example, maybe adapt or introduce new support mechanisms, or at least know that it's not realistic to say that without subsidies, public authorities are able to reach their energy targets. So here, just a quick overview of the initial responses we have seen. You can see here that for generally there is interest, but only if public authorities receive more support. But there is also optimism, which is good. But again, we need to get more and more responses to have these results be very representative. This is also quite interesting. The bits I marked in green are those that received most answers. So you can see that the legislation and regulation, for example, the public procurement law, needs to be adapted to allow public authorities to use those instruments. For example, EPC means there needs to be a possibility to have long contracts or a quick selection process for an ESCO, which is a private partner, and that's not always already possible in all countries. Public authorities need more capacity in terms of knowledge and the time to learn, so to participate in trainings, exchanges, etc. The market needs to be more developed. There need to be more investors, more private partners who are reliable. So that's also something that is quite shared among the people who participated in the study. And there needs to be more advisory support provided to public authorities. And by advisory support, the difference between the capacity and advisory support, that advisory support is something external. For example, it might be readiness on the national level or EU level to provide some documents, provide some model agreements that public authorities can use. And partly this is possible. So that's also something we want to flag up, that there are some opportunities public authorities don't know about. And this is almost the last slide, I think. So also a kind of a teaser of what you can learn through the results, what motivated you to use subsidies. And you can see that it was because for many people, it was because of of the amount of money they needed to implement the project was just too huge to look for traditional funding, and they needed to implement the project rapidly without much delay, and that was the motivation. But also they felt more comfortable because their staff increased their awareness, understanding of this instrument. They know that there are such options, and they feel a bit more confident that they know what to look at when they are preparing to use those options. So far, as you can see, we had kind of similar rate of responses. That's why I would like to really know what the opinions are all across Europe, and then we can give you a very reliable feedback on that. That's it. I tried to be brief. I wasn't as brief as I should have, but if you would be interested, please do get in contact with me, and I am really lobbying you for participating in the consultations. It takes around 10-15 minutes depending on how much information you want to give us, and it will help us help you by providing those results. If you would have any questions on Prospect and what we are doing, I guess Miguel would then also follow up in the later session, because I will need to leave you a bit earlier. Thank you.
Thank you, Silvia, and thank you for highlighting the importance also of the regulatory framework and the private partnership in the topic of defining business models, and also to find innovative financing instruments. Thank you. So now next to our next speaker, Damian Wagner-Herold from Scalable Cities. Damian, the floor to you.
So now you can hear me. I will share my screen. So can you hear me now?
Yes, we can hear you. The screen is not.
So
yeah.
So I can not only hear myself. So very interesting presentations, and I think we are all focusing on, as I call it, the upscaling elephant in the room. What we did at Scalable Cities, my colleague Andrea and I, Damian, the Smart City Consulting, we assessed the lighthouse projects and the cases of the lighthouse the latest 10 lighthouse projects, and we're looking at innovative business models and cases in general. And yeah, one of the findings to say first is, this is a quote from one of our interviewees, really that, of course, an energy district is not, or PED as they're called in the lighthouse programs, they are not just a product that you can buy. It's usually a process that needs to be built. And some of the big questions really are, who owns this process? And is this, in the end, is it a service or service model or product, depending on who handles it? And looking at the cases, about 20 cases we are looking at that the project sent to us, the basic, say, building blocks or elements of the PED or a smart district is really, the generation of renewable energy infrastructure and storage. And in the earlier projects, starting in 2014, 15, mobility, transport, and efficiency in buildings, retrofitting, was still like kind of the basic building blocks. And what makes it smart, after all, is establishing connectivity, interoperability between, and Miguel mentioned that, between the technologies, for example, by energy management systems, trading systems. That's where AI, artificial intelligence, jumps in, data platforms, bidirectional charging, energy communities on an organizational level. And this is kind of what, after all, makes the bits and pieces of a PD or a PCED district really smart. And one of the main challenges we have identified is really, if you look at the diagram, you have the market investment readiness on the left-hand side, and you have the, let's say, upscaling process on the axis, which goes from piloting to operation, which should not be forget. As a city, you are really focusing on
Damian,
how to operate.
I'm sorry to interrupt, but I think that we are not seeing the slides as you are going through them. Can you check? We just see the first one.
Okay, then do you okay, so I reshare.
Yeah, maybe if you can just reshare and
Can you see it?
yes.
So always I have 3 monitors here. So can you see my curve?
Yes.
Yes.
Okay, sorry about that.
Thank you.
So big challenge, as we call it, the piloting trap. So you have the piloting on the way to upscaling. You have the piloting. You also, as a city, always focus on how to operate these solutions, and then in the end, the upscaling. What the business partners focus on is really what we are looking at. And on the way, you know, the products or the solutions on the way to the market investment readiness. We really have this project process, as you can see, the blue curve, you know, going through the piloting phase, but then towards operation and upscaling, you really need a big jump towards market investment readiness, bankability, however you call it. And this is really what we, you know, grants go down, public grants, as you mentioned before. We really have this trap, how to get, you know, how to have this jump toward readiness and the upscaling and the long-term operation in the end. And this piloting trap is really something we need to address. The lighthouse projects have been facing, and our kind of focus was really on how to connect the dots. And we have different levels there. We have the level of technology, we have the level of financial schemes, and we have the organizational level, because you also need to address, for example, through energy communities, you need to address it. And the technical or the technology level, you really need, on the PED level, you need a service or operational model, because in the end, you need to connect all these different solutions, management systems, etc. You need to connect it to an entire PD or entire district. Also, and this is something you've also mentioned before, there's a great need for vehicles, and this is kind of the elephant in the room. Vehicles as in how to organize, how to structure this process. And this is, for example, where energy communities come in, but also what financial schemes can establish bankability and can help us to upscale and overcome the piloting gap. And our assessment really was, and our focus in the assessment really was, you know, to find good examples, good cases, good schemes, you know, which can address these challenges. And after all, we selected and deep dived into 11 of them. This is kind of raw material since we're just drafting the report, but just to give you an example, for example, we had the data platform, some kind of marketplace in Rotterdam, where Rotterdam chose to outsource the entire platform and most of the costs as well. And they took the role of an intermediate. They set the rules, they set the governance, they make sure everything is GDPR. And where the money making takes place is really, you know, when some providers, when products get offered through the platform, and that's where the money making is. Yeah, so, you know, not finding like concrete business cases, you know, all the way through was not a problem at all, because there was a lot of value created, a lot of impact created through this project and trialing many of these solutions. And one of the big benefits that I remember me mentioning that 6 years ago already with Triangulum was really this risk assessment, risk reduction that takes place within the piloting projects towards scalability, and which helps business or everybody who wants to replicate and scale up the solutions not to end up in a costly dead end. Also, and this is especially on focusing on energy, we have a lot of positive impact on grid flexibility through different solutions, through self-consumption from renewable energy. As you know, this is kind of the autonomy of these districts is a big focus we have. And we've learned a lot about energy systems and managing systems, as well as trading, which is increasingly done by artificial intelligence. As you know, that is a learning process. And it helped, just to give you some examples, to also foster the local ecosystems and innovation ecosystems, which, you know, not only the district, but all the solutions within the district need to be embedded in. And big finding we also had towards the upscaling was, and that was mentioned before, that, you know, regulation and legal framework is very different from country to country with regards to energy. So this has to be taken under consideration as well. So what could be possible business models? And again, just a couple of examples. There's a lot of batteries, second life batteries involved. For example, one case focused on bus batteries, you know, how they could be rented, the operation of renewable energy, PV plants, of course, and also developing energy as a service models, you know, which include also generation, storage, and management, but also is again a learning curve. And possible business cases coming out of this is the operation of data spaces, because in the end we need data to establish interoperability of the solutions and the districts. And well, to have a bit of a conclusion, it is really most important to also understand the value chains and the value creation within these value chains and the roles everybody takes. And the big asset we have, and that's something, Miguel, you mentioned again, you know, is about the stakeholders on the district level, inhabitants, the businesses, community industries, etc., as well as administration, as kind of a bottom-up approach to make sure those cases and business cases address the right customer journey. So to wrap it up a little bit, and you know, this is a bit of a flashlight only. So what we have to keep in mind, and if we really want to find the right solution to it, is that cities will always focus on value creation and on operation, you know, on how to operate those solutions and make them part of their master plans. So they have little focus on business models. They do not have the expertise usually, and they do not have the language to address them. So it's very important to understand the value chains and the role of cities and the regulators, you know, in terms of providing the space to maneuver and pilot these solutions and the business development. Then the PD or the districts in general, they're really ecosystems of various solutions. So it's very fragmented. There's a lot of different partnerships, collaboration, and the success really depends on how to connect the dots on an operational level, but also on the financial level, but also on the level of working together, you know, in collaboration. And it always takes integrating technologies such as management systems to, on a technical level, to put them together. After all, you know, not having pinned down, you know, the business case, maybe they have, and the projects have hugely contributed to creating business and business development, and especially on the risk reduction part for businesses. And the role we have been discussing a lot is really which role cities should take, and they should set the framework. They should moderate, intermediate to the local innovation ecosystem in order to for businesses to you know, run their business development. But because all the cases we've identified that were run by businesses, they're fine, right? So what we really have to address is how can we embed them within the entire ecosystem. Okay, this was a bit in a nutshell. Some of it you have seen. Is there any questions to that?
We will leave the question for later, Damien, as we are a little bit behind with the agenda. But thank you for sharing the findings from Scalable Cities and the emphasis on the value chain and the upscaling and scalability barriers also. So maybe we can go back to this concept later. So now to our next speakers, Rachel Demarie and Moadesh Maktabifar from Making City. I leave the word to you.
Thank you very much, Stefania. I tried to share my screen with you. Can you please let me know if you can see my screen?
Yes, now we can see the screen.
Okay, perfect. So in this slide, we will talk about making cities financial solutions for cities and cities.
We can't hear you anymore.
Okay, just a second.
And yeah.
Yes, okay. Yeah, now we can see the presentation. Yes.
You can see the presentation and you can hear me as well, right?
Exactly. Perfect.
Okay, great. So no need for hands-free. Yes, and my name is Mohaddasa Maktabifar. I'm EU project manager at R2M Solution. We are the partner for exploitation and business modeling at Making City project. So the objective of this presentation is just to share with you the structure of financial toolbox and the recipes that generated blueprints for business models and their incubation in Making City project, and also share an example of a city's current business model diagram and also predicted financial values. So from two of our cities, Oulu and Trenčín. And for the agenda, it will be divided into two main sections of financial toolbox and its components. And in the later part, I quickly take a look at the examples from the cities. The second bit is part of another deliverable and another task called a business model handbook that we are working on, while the first bit, financial toolbox, is a part of the financial toolbox deliverable, which is also available on the Making City website. So let's take a look at the financial toolbox structure. Here you can see how it looks like. This work was influenced and inspired by the work done in Positive City Exchange, where R2M was also a partner. First off, we made sure to inform our cities and city suppliers of the toolbox itself. We let them know about the terminologies to make sure that the cities are all aligned with each other. And when we're asking them for a specific piece of data or a specific contribution, they know what we are referring to. So the toolbox itself, it suggests pathways for replication of bankable solution packages to give confidence to investors for investing in large-scale replication and reducing risk. Then we have on the left financial models that are those that help realization of solution packages, each one with peculiar characteristics that make it more suitable for specific categories of technologies. Then on the far left, we have the providers. We shared with them different types of providers and told them that these are the body that provide credits, arranges, facilitates the provision of debt, such as those of public resources, regional, national managing authorities, international financial institutions, private resources, such as investment funds. Then we talked to them about delivery vehicles, a functioning scheme that supports the process of receiving funds. They can be made by a mix of a few intermediaries to form a comprehensive structure to undertake a specific business purpose or activity, either directly or indirectly through ESCOs, SPVs, SMEs, or private owners. And on the far right, we talked to them about CapEx and OpEx. This bit of work was also very much intertwined with another deliverable where we focused on we supported the partner, Demir Energy, on focusing on financial plans for follower cities and calculating actually the capex and opex for each of the selection of positive energy district technologies within follower cities. So for capex, it is capital cost. Capital expenditure is incurred when acquiring assets that could be beneficial beyond the current tax year. And for OPEX, operational and maintenance costs consists of those expenses incurred to run smoothly every single day. They are the costs incurred while in the process of turning an inventory into an end product, hence depreciation of fixed assets that are used in the production process is called the OPEX. And what is the financing scheme that we have been trying to share with them an example of them, and also trying to build it with the cities, their current financing scheme on the ground in their positive energy district technologies. It is any combination of financial models, delivery vehicles, public-private providers required by solution package over its life cycle. So on the far right, you can see an example of solution packages. We had multiple of them, one or two, like an umbrella, a package of solutions in each of our cities. And we try to bring examples for that a city can associate themselves with. They can compare it with their case and they can get inspiration from. So what we have seen until now was the structure. Here we first ask them, which country are you operating in? Are you one of our lighthouse cities, Groningen, Oulu, or are you one of our follower cities, Bassano del Grappa, Vidin, Trenčín, Lublin, Leon, or Kadikoy? Then we ask them, okay, for which of your projects, for which specific positive energy district technology are you looking for investment? And we gave them a selection from which they could see which financial instrument is applicable to, depending on the size of the technology and its coverage. So it could be crowdfunding, public-private partnership, project financing, forfeiting model, tax incentives, EPCs, project bond, etc. And for each, we brought an example, ideally active in one of the making city countries, but if not in a neighboring country with projects with a similar scale. And depending on the relevant financial provider to their technology, we introduce some, depending on relevant financial model to their technology, we introduce some financial providers to them. Among the groups of, for example, public entities, development banks, commercial banks, crowdfunding platforms. And later, by the examples, we let them select and investigate further what works best for them. Also, just to mention, in this part of our work, we really got a heavy support from our partners, where we asked them to contribute in the creation of a financial provider database. So they introduced to us those commercial banks, national banks that are active in their countries, locally or regionally, and they have maybe a ticket size, a program, and to invest on projects on energy transition, and specifically a technology that may be within making city. So here you can see an example of how it looks like within our methodology and also our deliverable. We see, again, depending on the technology, they can see the financial model, its applicability and key points, main features, description, financial providers involved in this model, and functioning scheme. And also a case study with a different scale, and types of projects, types of positive energy district projects that this model covers. And here, so later at the later part of the deliverable, they could see the list of the providers, some of them those that they have introduced to us, with again the program of funding, the type of provider, type of financing, who is the beneficiary, and what is a relevant case study. So for example, here in these 3 pages, you can see public entities, managing authorities from the Netherlands, Spain, Poland, and Finland. So that was the first part of our work, which is, again, accessible via the Financial Toolbox deliverable. The second part that now we are finalizing is the Business Model Handbook, where after this study, we shared with them a toolkit, and we asked the cities to sit together, come together, discuss together, and draw their business model diagram. So if they are a lighthouse city and it's already in place, maybe it is more final, but if they're a follower city and they are still in the initial stages, maybe it's a good place to start the discussion. So you can see each of these blocks represent an entity within the diagram: citizens, municipality, crowdfunding platform, ISCO, for example, intervention beneficiaries, intervention suppliers, and also the flow of financial values and also services between them. Here is an example coming from our lighthouse city of Oulu. I won't go into the details, but you can see, for example, the presence of a special purpose vehicle and ESCO in their diagram. And here is an example of financial values shared with us from our follower city, Trenčín. You can see, for example, active investments in 2023 within their positive energy district technologies. For example, refurbishment and installation of, they had a high school, ice hockey, a stadium, photovoltaics, and you can see the share between the own funds and public funding and subsidies. Well, I won't go into the detail. I just mentioned that in another part of our study, we asked them about the challenges that they face, because not every city could give us this information regarding the diagram and also the financial values. And a lot of them, maybe to echo what Damien mentioned, a lot of them said, we don't have this data, or we are not expert in this field. We are not very much connected to the financial department of our municipality. And for now, maybe this was a good place to start the conversation, but later on, as we go forward, we need to bring them together in order to be able to get more solid state-of-the-art and information. Thank you very much. You can get in touch for more information by sending an email to me. And also, as I mentioned, the deliverable is on Making City website. It is deliverable D6.7 Financial Toolbox for cities and city suppliers.
Thank you so much, Madesh. Actually, this was very interesting. Also, I think for our cities, very interesting to see a concrete application of the value chain, the stakeholders, and how it works all together. So thank you so much. And we will come back to it later during our discussion. So we have heard the speakers from external projects and initiatives, and now I would like to leave the floor to Ascend and Neutral Path cities and partners to reflect and to present very briefly the approaches that have been discussed so far on business models. So I leave the floor first to Céline Lawrence and Philippe Fournan from Ascend.
Okay, thank you very much, Stefania. Can you see my screen?
Yes.
So I have to put it in display mode. Sorry, just a minute. Okay, that will be better. I think you can see the screen. So now, thank you very much. All I have seen.
Sorry, it's still not on full
Sorry?
mode. It's not on full mode. Can you put it?
Yeah. Problem is I don't know where, because it suddenly disappeared from my screen, the full display mode. So that's a bit strange. I can't find it. That's a problem to shift from one to another system. Sorry. I don't know how to proceed, in fact.
We have a full...
okay, I think it's here. Okay, great. That's here. It was hidden, in fact. So I think it's better right now.
Yes.
Yeah.
Okay, so let's start by presenting the approach of Ascend, and then I will, for the more expert approach, leave Selina and also Carola to present the approach. So Ascend is just a word of introduction. We have three main objectives, 2 PCED like you, I guess, Lyon and Munich, start to bolster PCD in 6 multiplier cities. We call them not fellow, but multiplier, because we think that now cities are too much advanced to really learn what lighthouse cities are doing, and they can start and bootstrap PCD by developing very impactful operation. And then we would like to trigger PCD across Europe, of course. We are, in fact, working on 6 solution package. The idea is to de-risk for cities and for investors the financing of the solutions. So they are very traditional, because you will find digital tools, you will find solution about mobility, about smart energy services and zero carbon buildings with, of course, renewable energy sources and citizenships. That maybe the difference, and it's which try to highlight what Damien and also Moi and Miguel emphasize, is at the core of those solutions, you need someone to orchestrate, to connect the dots, like Damien said, and that's the solution called urban orchestrator that can take many different formats. That could be a SPV, that could be a city mission, that could be something different, but we need someone to connect the dots and maybe to orchestrate the deployment of the value chains emphasized by Damien. What we want to really do is to address, one, the hard problem, because it's not so easy to deliver positive clean energy district, but for us, it's not the real problem. If we just deliver 2 PCD, I have to say, it's my personal opinion, we will fail. The real problem is to deploy, to scale, to not being stuck in the pilot trap, like Damien emphasized, and to channel more funding and financing. And our ultimate goal are really to speed and scale the adoption of our solutions. That's something we are not used to do in pilot project, and we have 4 main challenges to address this goal. The first one is to enable. We have, and that's difficult, to make public authorities and cities more aware, more understanding what is a business model. It's always a word composed, it's 2 words. One is not really understood by the cities, it's business, because cities don't do business. And the second one is models. I think that, Damien, you start to maybe clean or to define a bit better what we aim to do, because that's the idea of operating, and the idea, in fact, after to have a business model. Business model is just the way you can work on the services and work on the value chain to deliver these services. The second one is the mindset shifting, because I like very much the example of Moi, but in that kind of project, pilot project, we don't scale by design. We start usually to work on the solutions once they are almost off the shelf. And what we would like to do in Ascend is to do the opposite, to scale by design, which will require data, which will require engagement. It starts now. And for instance, what Moi emphasized about, sometimes the urban manager, the project manager from one city in one-off project, do not have the connection, or it's too late with the financial guys. And we really need to make this connection as soon as possible. Third one is to assess and to monitor the deployment of our solution with the maturity model. I will let Carola explain more in depth. And the last one is to testing, to engage a dialogue with investors and cities. And we started already to engage this dialogue. So I will now hand over to Selina to explain how we work for the business model. Selina?
Yeah, thank you, Philippe, and thanks for making the introduction. As you mentioned, or as Philippe mentioned, we have already started this dialogue also with the cities that are part of our projects of Ascend. So what we did in the first months of Ascend is, when it comes to business models, is we interviewed cities about existing solutions they have for all of our 6 solution packages. And what we did is we asked them about the business models that are behind those solutions. So what we found is that often when we ask the cities about their business model, or when we ask them if they have some business model, they answered that the topic of business models has to date not been a topic of relevance for them. However, when we then ask them one level deeper about the elements of a business models that you can also see here, so about who is like the target customer they address, what is the value proposition of their solution, how can they create this value, for example, then we saw that still implicitly the cities, they have a business model behind, or at least some operating model already, even though they often don't call it that way. So here we just want to quickly show you with an example of the digital platforms that Ascend cities have already in place, that even though the cities maybe do not explicitly manage their business model behind these platforms, we see that the different elements are already there. So Philip, if you please click. So if we look at, so what we did is we compared 3 different examples of urban platforms, digital twins we see within Ascend already. So if we look at the different target groups of the platforms, we see similarities between the solutions we analyzed, and that is mainly public decision makers, planners, citizens that these cities kind of target or have as their customers, as their users for these models. And also the platforms, they all have in common that they have a value proposition, of course, which is in this case mainly providing support for decision making, for improving efficiency in the city administration, and for informing citizens to increase citizen participation. And also we see that the platforms are, when it comes to value creation and delivery, often open by default. And while they are based on different technology, they usually build on diverse sets of input data and that is then visualized in a certain form, like it is, for example, with the digital twin example. And what the 3 examples also share is that when it comes to value capture, there is usually an investment involved and no direct revenue streams. However, like cities usually invest in a digital twin, for example, to optimize policy. And this is something that would actually be monetizationable. So because you can trigger savings with that, for example. So basically what we see as one of the main challenges also for Ascend is to increase the awareness that first the cities already have implicitly like business models behind their solution very often. And we want to show ways and tools how to more effectively and actively also manage them in the future to really enable the scaling. And second, we also want to raise awareness on alternative ways of funding specifically when it comes to these models. And such an investment behind solutions like an urban data platform or a digital twin can be also funded using ways, and we've seen that already today, besides using just tax money, because when it comes to value capturing, we have seen it with almost every example that we have kind of collected through the interviews, that this is not something that cities have managed strategically so far. And with that, I want to hand over to Carola, who's going more also into this funding example and what we've done so far.
Hello, everyone. It's Carola from Actuam Solution. Thanks, Elina and Philippe. Just briefly, I would like to present some takeaways from a workshop we ran with the cities and investors in the context of Ascend and in the context of the Smart City Business Forum held in November 2023 in Barcelona. In this occasion, we initiated a work that Ascend wants to replicate between cities and investors. We brought them at the same table and we tried to trigger a dialogue between them. So we had the chance to have a representative from Utrecht, Limerick, and The Hague to present their use cases to investors. So projects that contribute to the development of a positive clean energy district. And on the other side, we had a chance to have amongst us a representative from Banks Without Boundaries, G&E Finance, and the crowd, so financial instrument experts. From this workshop, we saw that the main points highlighted by investors are mainly 4. And Philippe, if you can go on the following slide. Here you have this main focus. of the discussion that are very connected with all the items aspects that have been mentioned by previous speakers. For example, the first main focus is about the capability to present the key figures of a project by the city. So the importance of the non-monetary benefit, like Miguel mentioned earlier, but also the capability to present the project from a financial perspective, to be able to show the KPIs that really speak about the bankability of the project itself. The second point is about the de-risking strategy. Investors were very interested to understand which could be the role of the municipality to de-risk the project, because in certain cases, investors are a little bit afraid in front of first-of-a-kind projects. So the role of the municipality, for example, in providing a guarantee fund or be the first investor for a project, can really trigger the attractiveness of from the investor's perspective. The third point was about the internal in-house financing expertise that city would have, because we saw during also the workshop that cities are really aware on the fact that they can't rely only on subsidies or on internal resources. So the investors were very happy to see that city had knowledge about potential other financing instrument to be used, and also about their capability to aggregate projects in order to have a scale-up strategy and have access to financing instruments that probably need a major basket for investment. And the fourth point is maybe the more important, but also the most challenging, is the change in mindset. So investors were asking questions that were a little bit difficult for cities, because in some cases cities have a business as usual mindset, but they need to be supported in a change in seeing themselves as a catalyzer for innovation. So in Ascend, we will try to help cities and to trigger the dialogue with investors. In order to do that, we will implement a capacity building program with cities. We will invite experts in financing instruments to at the same table with us. We will build a maturity model to assess the bankability, but also to assess all the non-monetary benefits that this project can trigger together with cities. And we will try to co-design this financing scheme and business model with cities and investors. So it's a very ambitious goal, but we will do it all together. And just to finish with our presentation, we would like, if possible, to ask a question to the city which are connected today. So I don't know,
Carola, if you don't mind, since we still have to hear from Neutral Path, and we just have really few minutes, if we can just switch this after Neutral Path presentation, and so we can start the discussion. Thank you.
Thank you very much.
Okay, so I leave the floor now to Miguel and Chiara Manago from Neutral Path, so we can hear our last presentation, and then we will go to our discussion.
Thank you, Stefania. I'm going to share the screen.
Chiara and Miguel, I ask you to be kind of brief. I'm sorry, but we are running a bit late.
Okay. Okay, I guess that now you can see my full screen, right?
Yes.
So I try to be concise and go straight to the point. So we are going to just to give a brief introduction, and then if Miguel would like to add something about the Neutral Path NEUTRALPATH project. The NEUTRALPATH project has the scope to show that the positive energy district are designed and developed under some bottom-up principle that are a solution that can really contribute to the reach the decarbonization strategy that the city involved are trying to target in a really short elapse of time. The NEUTRALPATH project involves different kind of entities. Cardiff is the main coordinator. Zaragoza and Dresden are the lighthouse city, while we have 3 different kind of fellow city, which are Ghent, Vantaa, and Istanbul. And we have a transversal and cross-sectoral collaboration of different partners. And here now I'm representing RINA Consulting that is dealing with the business model and financing scheme for NEUTRALPATH. So, as I was saying before, Zaragoza and Dresden are the lighthouse city under the NEUTRALPATH umbrella. They would like to have an ambitious goal to achieve the climate neutrality by 2030. And for this reason, they have initiated a series of activities to meet this short-term objective. And so they decide to leverage the NEUTRALPATH project to reach this ambitious objective through the positive energy district. So as you may know, positive energy district are urban district where various energy systems are integrated to reduce the district emissions, while ensuring at the same time the energy supply improve the social and economic and environmental aspect of life. So positive energy districts are also aligned with the key sustainable development goals, in particular those that you can find highlighted in this slide. So we are, as I was saying before, under the NEUTRALPATH, I'm dealing with the business model and financing scheme, and I'm happy to see from the previous presentation, and I'm referring to especially the one of Damien, that talk about value chain as a positive energy district as an entity that is really fragmented, and this is something that actually with NEUTRALPATH we would like to deep dive a bit more. So we have first analyzed what means positive energy district and which are the 4 key pillars that compose the positive energy district. We talk about energy efficiency, renewable energies, energy flexibility, and also sustainable mobility. All these components actually are part of our Zaragoza and Dresden city, and this come really clear from the analysis of the energy value chain that we are approaching. In the next slide, I will show you this energy value chain representation. So we start from the Zaragoza energy value chain. Is a really simple energy value chain because the city is still implementing it and analyzing it, so it's not a consolidated version yet. However, the aim of describe this energy value chain is to provide a conceptual representation of the project or the process, through which the energy is produced, transformed, distributed, consumed, and also highlight the type of energy that is produced. So if you are talking about renewable energies, thermal energies, which are the entities that are involved, and along with trying to also figure out which are the exchanges, not only in terms of energy and money, that occurs among the entities that are involved along the value chain. So here, as I was saying, you see a really simple representation of Zaragoza. So just to keep it short, but the idea of Zaragoza is the district that we are going to analyze is composed by 6 buildings, 2 residential, public school, and nursery schools. So the idea is to reduce the thermal energy demand with facade refurbishment, windows improvement, and installation of other innovative insulation material. They forecast the installation of renewable energies facility on the site area. So we're talking about thermal energy, but also PV panels. And also Zaragoza would like to address the e-mobility strategy, installing V2G chargers that will provide, among the others, also the benefit of giving flexibility to the grid. The other lighthouse city is Dresden. Dresden actually is composed by 2 different sites. Here we're starting from site A. These 2 areas, so site A and site B, actually are really interconnected because they are sharing energy. We're talking about a more wide area that is composed by 70 buildings, 15 residentials, and 1 supermarket and a daycare center. Just to really, again, be quick and keep it short. The idea here is that to rely on thermal energy, provide installation on the roof of multifamily residential buildings, have bidirectional charging infrastructure, again, for the scope that I was saying before for Zaragoza. In the other site, which is site B, they would like to, experience the PV, a combination of solar and thermal energy on existing and new constructing building that will be put in place in the site B, together with, again, the sustainable the e-mobility infrastructure. So
yeah, I'm sorry to interrupt, but since we are really running out of time, and I would really like to give the audience the
okay, sorry. I try to speed up. Wait, that I
if you could use just 2 words to wrap up, and so we can leave
okay. I just wrap up, and what we are doing now regarding the business model is that we have start looking at the energy value chain, understanding which are the connection among the key stakeholder, and for both Zaragoza and Dresden, we have been able to see which are actually the really key stakeholders involved. The other step will be to study the stakeholder value proposition. So which are the target in terms of environmental? Yes? Yes, can you hear me? Okay, and match this value proposition also with the technology that we would like to install in the district, and then provide them a sort of archetype of potential business model that could be used under that district. The other part that we are going to face is to find a financing scheme that is suitable for the both cities. So this is that I'm showing is a diagram that in our opinion could be really useful to understand and provide a sort of guide to understand which could be the key feature that they have to look at in order to understand which is the best match for their solution. So we have public sources, but also private sources, and we have, as you can see from this slide, some instruments that have been already presented in the other slides. I'm just closing my presentation, say that both Zaragoza and Dresden have already started some step in order to find some financing, and they mostly are trying to look for public source of financing. So they are approaching some funds that are regional, local, and national to start have some money for their PED implementation. And Zaragoza has some a bit more challenging because again, its entity is municipality entity, doesn't allow to be open to have a bank credit, so access to private funds. However, we will provide them also in this case a workaround, a solution to overcome this barrier. And again, as Dresden is doing the same that Zaragoza is doing, so approaching public source of financing, and obviously has a big aspiration to also have and be able to capture some private investors for their district. So I'm sorry, I keep it really short, but
thank you, Chiara. And no, thank you so much. So unfortunately, we just have time for one or maybe two questions. So let's going back to the chat. I see that Hanne had one question. So Hanne, the floor to you, if you want to ask your question. I think it was about the first presentation from Miguel.
It referred indeed to the initial introduction presentation where we saw the Bankers Without Boundaries quote that said, if you include renovation and refurbishment, we don't have a business model yet. And I wondered how actually all the other presentations look at that, because we saw a lot of toolboxes and handbooks, and so a lot of solutions presented, and I wondered if they also account for the full integrated challenge that is the combination of the switch we need to make to more renewable energy systems and refurbishment of the already built environment, because this is something that we're struggling with also a lot.
Miguel, if you would like to jump in.
Yeah, I think, well, the quote basically refers to the fact that there is not, let's say, a unique business model that can be, well, scaled up and replicated, let's say, in order to cover the full requirement that we have in order to transform the existing built environment. But the thing is that, well, even not having a unique business model, there is an option in order to combine different business models and different financing instruments in order to make these projects, well, viable. For example, yeah, it's true that in case of thinking of the retrofitting part of or the part related to reducing the demand, the return of the investment is really long, and this makes well that from the, let's say, perspective of analyzing the business model from the profitability perspective, it's not that easy to be implemented through a traditional EPC, for example. But we have had, and I think that in that case, the key is on combining financing instruments that can somehow reduce the need for the private investment, and then to cover the private investment with a kind of advanced energy performance contracting that can exploit, for example, in the case of positive and clean energy districts, the flexibility that we have in the district, and also the surplus of energy, which can contribute to reducing the return of investment when combining passive measures with active measures and with renewable energy sources. So I think the key is on, let's say, the thinking of the deep renovation as a combination of all the technologies to first reduce the demand, but then produce more efficiently and produce with renewable energy sources, and then translate this into a financing schemes complementing public with private funds, and then implementing a business model that can support let's say, the required investment from the private sector. For example, and I think Silvia mentioned one of these examples at the beginning, that we implemented not in NeutralPath, but in a previous project that was Remo Urban in the framework of the Smart Cities and Communities project, where we implemented this kind of advanced EPC that was based on, well, the financing scheme was based on the public grants plus some public funds coming from the municipality, and then the private investment coming from the owners of the dwellings was implemented through a soft loan that was negotiated with the bank through the construction company as a facilitator, and then an EPC in order to cover the rest of the investment, and then through a long-term contract, well, they could repay the required investment for this. So at the end, it was a matter of first defining the project from the set of technologies and the set of solutions, and then mapping this into the financing streams, and then the available business models, in this case, well, for the private investment that was required to be covered by the owners with the support of the ESCO company.
Thank you, Miguel. So unfortunately, we are run out of time. We didn't have so much time, unfortunately, to discuss. But I do think that that we heard very interesting points from all our presenters, and this will be our starting point to keep this discussion going in a new series of webinar focused on business models and financing. As we see, there are many points that we still have to discuss and to involve the cities. So I would like to thank all of our speakers and the audience. Thanks to the cities. I'm sorry that we didn't have time to hear more from you today. But as I said, we will keep this discussion going in a new series of webinars and events in collaboration with the other projects and with Scalable Cities. So thank you so much. And we will also share, of course, all the presentations so you can keep in touch with the speakers. Thank you so much.
Thank you.
Have a nice day.
Thank you. Bye-bye.
Thank you.
Thank you.
Bye.
Bye-bye. See you soon.
Thank you.
Bye.
Bye-bye.